Hey, Colin Plume, CEO of Noble Gold Investments, and excited to be on with you guys today. Lots happening. We have a year-end wrap-up that we're going to get into with Micah in a little bit here. But before we get into that, obviously the first thing we want to talk about is what's going on with South Korea. South Korea, President of South Korea, Yoon Suk Yeol, announced martial law. And everyone's talking about this all over the news, social media, and I just wanted to break it down quickly and sort of go over what's happening and sort of the timeline of what's happening and also what how it could affect everyone in South Korea and in other places. Um, the president says he did this. He announced martial law because he's protecting the government against pro North Korean forces. He says that they're plotting to overthrow the government, and he wanted to protect the government in any way possible. There's not a lot of evidence to this, from what I can find. What I can see is that there people are concerned about him as president. Um, there was some talk of impeaching him, and it seems like he wanted to enact this in a way to protect himself and probably his cabinet. Um, so he announced martial law. And martial law should be enacted typically in times of war or national disaster. So it's unusual for someone to do this unless there is evidence to the contrary. Parliament in South Korea basically said we got to go in and vote to lift this martial law. And if you see the videos out there, basically the government standing by and Parliament is hopping over fences, doing everything they can to get back in and vote against this martial law, which happened in South Korea. And people would wonder if the president, maybe there's some belief that the president is accurate in what he's saying, and maybe Parliament will vote to support what he's saying. But they did not vote what he was saying. They actually voted 190-0 that they want to lift this martial law. So not even anyone in his party, typical supporters, none of them voted to support what he did. So they voted against it. And according to their constitution, the president shall comply when the National Assembly requests the lifting of martial law with a majority vote, which 190-0 is a majority vote. But he has to, the way that the government is handling it, or at least the military is handling it, they're supporting the president, and they're saying until he announces that martial law is over, they're not going to do anything. And so they're sort of in a stalemate because the Constitution says one thing, and what's actually happening is another thing. So it's quite scary. These types of situations are quite scary for citizens there that don't really know what's going on. They're concerned about themselves, and nobody wants to be in martial law in any type of situation. You don't want to be in a country with martial law because they could dictate social media, they could dictate the banks. They say the banks are going to be open. It's about 4:20 in the morning in South Korea right now. They say the stock market's going to open, but maybe it won't. I mean, these are the issues that when you have a government overreach, which is exactly what this is. It puts everybody in jeopardy, and that's sort of what we do at Noble Gold. We talk a lot about just having protection against the government and protection against an overreach. That's why having some money out of the markets, not tied to what they can control, is really important. Also, the Korean ETF market obviously just totally collapsed when the market opened. Their iShares dropped, like a cliff, basically. So it doesn't create any confidence in the economy when you have a president sort of dictate this martial law situation. So we're all watching the market. The market will open pretty soon in South Korea, and we'll take a look and see what happens there. And hopefully things sort of go back to normal. There has been some talk if the U.S. is getting involved. This is, I'm concerned always when the U.S. is getting involved in other governments' business, but this is what's happening in South Korea. So at this point, they're sort of stuck, right? Parliament voted for them to lift it, and the president at this point hasn't said anything. He's sort of holed himself up in his house. We have the White House, they have the Blue House there in South Korea. South Korea has been a longtime friend of the U.S. So we are concerned about this. We want to make sure that they're okay. So this is a developing story. We want to keep an eye on it. But I think big picture, this is a big part of the reason that we're always concerned. Last year we had a lot of the banks have issues and collapses here in the U.S. And when a country decides to do martial law, it really takes the power of the citizens out of their hands, and it puts it in the government's hands or the military. So it's quite scary, and it is important to be protected in these situations. And we're starting to see these situations happen more and more. So more to come on South Korea. I'm sure we'll talk about it on our next live broadcast. But now, very exciting. Want to talk. We're going to get together with Micah, one of our top salespeople over at Global Investments. One of the cracks the markets, loves the market. A lot of gold and silver in his portfolio, a lot of silver in his portfolio. So I'm going to hand it off to him and let him talk about what happened this year and kind of give us some insight into what happens potentially next year. So thanks, Micah.
Yeah, great. Yeah, thanks for having me on, Colin. It's a pleasure. I have whipped together just a quick recap what's happened this year, what we're going through these last few weeks since the U.S. election, of course. A lot of kind of developments there, but we're still in a long-term structural bull trend for precious metals that will last many, many years. And if you want to dive in, we can quickly cover first some intermarket analysis. I'd like to look at the US dollar. I'd like to look at the yield on the 10-year bond. And then we'll take a closer look at gold and silver and, like you said, where we're going, what some of the things that we can expect to see going into 2025. So if we want to cut to our first slide here. We've got the US dollar. So this is the Dixie. This is the US dollar strength relative to other currencies. All year, we've actually been in a slight, it's a downtrend. It's a long-term downtrend, but we've been making slightly lower lows all year long, right up until about that middle of September. And when the Fed, Colin, as you know, cut the interest rate by 50 bips, which was a big cut, technically a double cut, a catch-up cut, the dollar started to rally. And so this is a counter trend rally. We're still in a longer term downtrend for the metals, but this counter trend rally has been significant. So if we look at that second portion, that sort of second leg up in it, which is almost a vertical line, that's all happened since Trump got elected, which really was some of his policies, the position that he's taken against BRICS, just being very, very firm that the US dollar is to stay where it is. It's had a very strong surge, but we are now on a technical basis forming what's called a head and shoulders pattern, where you can see there's a little shoulder on the left side. We peaked above there to form the head, and we're now developing the right shoulder. And my expectation is over the next few days and even, let's say, maybe a week or so, the dollar or the Dixie should pop into that 107 level, forming that right shoulder. But from there, I expect a precipitous decline. A drop below 105 will bring us back to the September lows of 100. And the 100 level is like a cliffhanger. When that fails, we go into the mid to low 90s relatively quickly. Now, when the dollar drops, commodities rise, gold and silver will be a major benefactor from the dollar breaking down, which I, again, expect in the next few days, maybe a week or so. But this is what I'm seeing in terms of technical charts on the dollar.
And Micah, this chart is the dollar relative to
other currencies. Right. And so if you look at mid-September, that's when it started to rise. And then that second part of its upswing has been really since the election. You have to remember that there are other currencies in the Dixie, in that currency basket. We've seen the euro decline a ton. That has been a big tailwind for the US dollars because the other competing currencies are actually failing harder. But we have to remember we're in a long-term downtrend for all fiat currencies. That's why we can expect longer-term inflation. But of course, no trend is without various corrections and counter-trend rallies. So my long-term expectation is that the dollar declines significantly.
Correct.
Okay. If you want to pull up our next chart, we can touch on this one quickly. This is the U.S. 10-year yield. So again, a longer-term downtrend made a series of lower lows all year long. But when the Fed cut rates in September, and again, it was a double cut, it was a 50 bips cut, the bond market started to price in longer-term inflation. We know from rate cutting cycles, most recently the COVID cutting cycle, that as we lower rates and print a bunch of money, that's inflationary. So as we cut the overnight rate by 50 bips, the 10-year actually started to rise. So this is a headwind for gold and silver along with the dollar. When the yield goes up, it's a safer asset. You're getting a better return on that. But we have a bear flag that is now breaking down, and my expectation, which will coincide with the dollar breaking down as well, is that we should get back to the September lows at about 3.6%. That'll be the yield on the 10-year.
And Micah, this, the 10-year is really what affects mortgage rates.
Exactly.
So a lot of people thought when the Fed, we've talked about this a lot, they thought when the Fed cut rates, that mortgage rates would actually drop, which I think that was the Fed's goal too. But, the Fed didn't realize that basically they were signaling to the market that there'd be inflation, and the 30-year mortgage actually did not drop.
Yeah, exactly. And there's this theory, we'll see how it plays out, of course, over the next couple of years, that the Fed could actually lose control of the bond market. We know that the Fed will probably cut in a couple of weeks' time when they meet in December. We know that the Trump administration actually wants, a much weaker dollar so that he can support all the manufacturing he intends to bring back home. But if the Fed loses control of the bond market, then there are a lot of other markets that could actually react negatively as well, like housing and or the stock market, of course. But just in terms,
if let's say rates 10-year continue to go up, we could see the 30-year mortgage even in the 10% range, right?
Of course.
It continue to skyrocket, and that would be, in my estimation, pretty devastating.
It is. Now we do need to note that most of the time, the yield on the 10-year and the dollar are negatively correlated with gold and silver, but not all the time. We've actually seen the dollar surge, like that portion in September where the metals also surged as well. Right. So if we lose control of the bond market and yields tend to spike, that actually doesn't mean that gold and silver can't make new highs. You'll recall gold made several new highs while we entered the steepest and fastest rate hiking cycle in the last 50 years, which was when we started raising rates in 2022 and raised them aggressively going into really this year. So gold made a series of new highs, higher highs in the steepest rate hiking cycle. Higher rates does not mean that gold and silver can't go up. Actually, it might actually be good for us. But in the short term, I like to see that the dollar's about to break down. I like to see that the yield on the 10-year is going to break down. That's a tailwind for the metals, and I suspect that'll be supporting us for the next couple of months.
And also, could you say that the 10-year rising precipitously the way it did also is people, big time investors, funds, not wanting to get into riskier assets, but they wanted to get into bonds a bit just to kind of hedge their bet?
It is. Yep, absolutely. It's a way to de-risk, but as is gold. And we think that there are a lot of big buyers of gold and silver as well that see the writing on the wall, potentially for a recession, stock market crash next year. You've noted previously a lot of the insider trading that's happening. Bezos, Zuckerberg, Buffett, they're all selling stock as the stock market rises into all-time highs. We could see something big next year. They tend to be proactive and not reactive like the rest of us retail investors. So a lot of interesting things going on here.
Yeah, absolutely.
Okay. Now we can jump into the metals now that we've covered those kind of two interrelated markets. This is a 3-year chart of gold. What we see is that gold broke out of a nearly 2-year consolidative channel. We were able to make a high in 2020. We were able to retest that high in 2021. We were able to get there again in 2022. and in 2023. But it wasn't until about March of this year when we finally broke above that $2,100 level. As they say, the longer in place, the higher in space. So the bigger the base, the higher the price can rise once it breaks out of that consolidative range. When we broke out of 2,100, we got quickly into that 2,450, which was about the May high. We spent the summer consolidating into a triangular wedge. Now, consolidations and these kind of wedge formations can break up or down, but of course, we broke up out of that, putting an even higher high at the end of October of about $2,800. What we have now, which is the opposite of what we're seeing in the dollar, a head and shoulders pattern, which we see in the dollar, tends to be indicative of a steep breakdown. This is referred to as an inverse head and shoulders, and it is expected to break to the upside out of the right corner of that circular formation, showing you that inverse head and shoulders. So, we have a little bit of wiggle room in gold, I would say, more so than in silver. Silver is very strong, and we'll get to that in a minute. But my expectation is, with the breakdown of the dollar, breakdown of the 10-year yield, coming into a very seasonally positive time for gold and silver, we should see this resolve to the upside. And my expectation is that going into the end of the year and through 2025, we'll see new higher highs well above where we were at the end of October at around 2,800. I see 3,000 coming into play within a matter of months.
Yeah, and for people that don't know, and I talk about this a lot, gold typically is like a stair step. It hits a high and then, levels off, it hits a high, levels off. So, day to day, obviously Mike is watching the charts, and there are people watching, but for most investors, you're going to have these new highs and it breaks low, and then, buying demand. And I think the interesting thing for me, just looking at the charts, is that $2,600 number. When it hit close to 2,600, there was tremendous buying. So I think it's some new floors. Obviously, that can change at the drop of the hat, but there is tremendous demand, and I've talked about a lot this year that the retail market in gold is really late relative to central banks and buying other parts of the world. I think the retail market is still catching up to the gold market. So it'll be interesting to see what happens with just a few more weeks left.
Yeah.
2024.
Exactly. So I started with a longer term, but you can see this is a very beautiful chart. This is, you can go to that shorter term. So just showing you here, it's a little harder to see. I'll make improvements for next time. But we're sitting above the 50-day moving average and above the 150-day moving average. This is just a key level that we want to hang on to in the shorter term, again, knowing that we're above these support levels. Once the dollar and the bond yields break down, provided that these levels hold, that's where we should see a continuation and a takeout of that previous high at around $2,800.
Yeah.
So we can move on to silver, and I'll almost reverse it so that we're doing silver in the shorter term first. Thank you very much. Now, silver has, like gold, pulled back considerably with this surge of the dollar, really since the 5th of November, since Trump won the election. Now, very constructive to see that we have not really been able to break below that $30 level. That is a key level to hang on to. Forever, it was resistance, meaning it was a ceiling we constantly smacked our head on, but now it's acting as an extremely strong floor, which is encouraging. So this is an ascending wedge pattern showing you that the long-term upward trend is still intact, but my expectation is as long as these levels hold, once we get that breakdown in the dollar and the yield, it should fly upward towards the top of this wedge pattern, which would bring us higher to the prior high of about $34, $35. We should be able to make it to 36 and 37. In the next slide, this is a kind of a longer term. Maybe we can zoom that one in a little bit. Thank you very much. This just shows us the year in silver. So if we want to just zoom out a slight bit so we can see the months at the end, perfect. So we were at $22 silver in March, right? Like we have risen 40+% this year.
This year? What a year we've had.
Just this year. But that is the nature of silver. Nothing, and then boom, explosive catch-up time.
Yeah.
And when we look at the gold to silver ratio chart next, you'll be able to visualize that a little bit better. But when we look at this rising channel, now this is the structural trend that we're in. We're in an upward trend for a very long term. For a very long time. We have throughout the year tested the bottom resistance line or the bottom trend line. What I'd like to kind of note is at the beginning of March, when we were at $22, we were then able to, we were able to get to the, sorry, I just lost you guys here.
We can still hear you.
You can still hear me? I'm not sure what happened, but that's okay. So I'll just, if you can see me and hear me, I'll just proceed. I won't change anything here. So in March, we were at the bottom of that trend channel. We were able to be at around $22, but we hit the midway point of the trend in May, and then actually rose into the $34 range. Now, I believe that we can see enough juice. We have reset momentum, we have reset sentiment, and we have technically reset the price back to its floor. We have all the kind of ingredients in this next leg to get into the, like I said, in the shorter term, 36, 37. But I presume we'll probably see the top of that channel at around 40 to 43 bucks. But for both gold and silver, my expectation is that we see new highs in 2025. And so the last thing I'd like to do is to cover off the gold to silver ratio chart, if you've got that there.
Yeah, we're sitting about 85 to 1 today.
Correct. Now, Colin, you know that historically the gold to silver ratio, the historical average is about 15 to 1. Now, we haven't been down there that low since the 70s, but we have been in this extreme undervaluation of silver for many, many years. So this is a multi-year chart. We can see that it has had several attempts even this year to break down below that triangular wedge pattern. So what's technically a support line. But when we're talking about the gold to silver ratio, down is good, not like the price on gold and silver. Up is technically bad for the price of silver. So we expect to see massive outperformance in the price of silver once this technically breaks down. And like with anything, you can challenge a trend line, whether that's a resistance or a support, several times and fail, but eventually you're going to succeed. Now, as we come into the apex of this triangular formation, I see it breaking out in a very convincing way, and just a measured move. In terms of Fibonacci levels, I suspect that we would get into the 55 gold to silver ratio range from the 85 range where we're at now. And I'm using a lower gold price here of about $2,500, but that would imply about $45 silver. And I think that that's a move that we can expect to see sometime in 2025.
Absolutely. Thank you, Micah. Appreciate it. Very in-depth.
Great.
I hope people, if they have questions, obviously they can send us any of those questions, and you can dive into some of the specifics next time. But appreciate you having you on, and look forward to
Thank you very much. Absolutely. Right. Thanks, Colin. All right. Take care.
Talk soon. Also update, multiple sources on X, Facebook are saying South Korean president will lift martial law. We haven't had any of the major publications go into this yet, but it looks like they are going to lift martial law. So that's a good thing there. So it's a quick little test for the Korean South president. Just wanted to see how much the people really loved him, and it turns out they don't love him. And he was wrong. So he's probably self-preservation there was probably what happened. On to some exciting news. World's largest gold deposit worth over 80 billion discovered in China. Anytime we find massive amounts of gold, anywhere in the world, we want to dive into it. It looks like China, and it's interesting because earlier this year, China said they're going to slow down on buying of gold, and so it makes sense. They have this discovery waiting in the wings. Probably just wanted to verify it. 80 billion in gold is about 1,000 tons. And the thing about 1,000 tons of gold is you can't pull that much out of the ground quickly. The last large gold mining expedition, which was in where was it? In Costa Rica? Where was it, Jared? South Africa.
South Deep.
They found about 800 tons, and it took them about 75 or 80 years to pull that out of the ground. So even though it's a massive discovery, that amount of gold just doesn't move quickly. The initial drilling shows that the 300 tons are in shallow veins, so it's something that's more easily attainable. But a lot of that 1,700 tons is really deep. And so you got to think that the deeper it is, the harder it is, the cost goes up. So this is really something that they're going to be mining for. My guess is probably the next 100 years. They'll be looking at it, and that's, I think that's why reading into the headlines a lot of times, like people say, oh, they found all this gold, like the price obviously is going to drop. Well, China's excited because they actually know that the price is going to go up significantly over the next 100 years. And so they're able to find this, and they'll just continue to mine it. But it's still well below what China needs annually. In 2023, China produced 370 metric tons. They consumed 1,089 metric tons. So they're in a massive shortage from what they're mining annually. So they need to continue to pick up gold from a lot of different sources. So even though they said earlier this year that they're going to stop buying gold, they're not. They're going to continue to buy gold. China tries to send messages out there, letting people know that they're not buying because they just don't want the price to continue to go up. They're one of the major buyers in the world. So yeah, this discovery is great. It's great for China. It also puts China in a strong position, unfortunately, against us. They are swallowing up most of the essential metals all over the world, and this is just another example of them, acquiring mines and putting themselves in a very strong position to be a very big superpower, for forever, basically. So, in terms of how it affects the market, I don't think we'll see anything because it's going to take so long to mine it. If they were able to pull out of the ground, in the next 3 weeks or a month or a year, then maybe you'd see that. But it's going to take them 100 years to pull this gold out of the ground. So exciting discovery, but listen, time, and these things take time, and there's cost to pull these things out of the ground. That's the beauty behind gold, unlike other assets, is that even though you find it and you're mining it, there's a tremendous cost, and that is good for the floor price of any commodity, is that there's always going to be a cost to pull it out of the ground, so that if the price of any of these commodities drops too much, they'll just stop mining. And so that creates a floor for all the metals that are in high demand. So in essence, if gold price continued to drop below the mining cost, then they would stop pulling it out of the ground, right? There'd be no reason for them to do it. So there's always an inherent floor with the precious metals that we sell in the gold investments, and that's what makes them really interesting and exciting investments. Also, to talk about something that's going on, and if for those of you who watch Joe Rogan and his podcast, there was a big talk about the power of the banks, and he had Mark Andreessen on, big VC guy, owns a big VC firm, very wealthy guy, and they were talking about how the government and banks are secretly debanking tech founders. They secretly debanked 30 tech founders recently in an effort to destroy their political opponents, and particularly those in crypto. There was a long discussion about what's happened in crypto, how Facebook wanted to release their crypto called Libra, and I think we have a video on that we can show you guys. But in essence, banks, they were trying to put their foundation together. Facebook was trying to put a foundation together, and the banks were just basically saying that it was too risky. Let's cut to the clip on the video. Is it glitching there?
Mhm.
Anyways, long story short, they talk about debanking institutions that are trying to put funding together and build businesses around crypto. And I actually had this specific thing happen to me. We can just, if it's not working, we can just cut out of it. I actually had this happen to me as a business owner. I've had this happen to me a few times. The first time it happened many years ago was when we had a Trump coin, and we actually started selling the coin, created a business, and all of a sudden we started doing sales. So I put money in an account, we opened the account, we started selling some coins. This was it was about 6 years ago, and all of a sudden the bank, major bank, froze our account and said that we don't understand. There was no, you put money in, and then all of a sudden there was an influx of money. We ended up selling a lot of these coins, and they don't understand. I said, well, here it is. Here's the transactions. Here's how we're doing it. It's pretty straightforward. I need the money to buy more coins, and it's a business, right? And they held my money. This bank held my money for 90 days, and I'm calling, and it was a lot of money. I think at the time, around $100,000. And we went into the bank, and they just kept saying, we're doing our research. We don't really know what you're doing. And I said, well, we've provided that information. There was nobody for me to go to. There was nobody that could go in and say, hey, you got to release this money. And we had to get legal involved. I mean, it was quite a fight to get this cash back. Eventually they did. But they just closed our account and just sent an email saying, we're going to send your funds back. No explanation, no nothing. And so it's frustrating as a business owner to, first of all, it was like we needed that money to buy more inventory, be more average, whatever we needed to do. We were running a legitimate business. I proved to them, and I actually told them what the business was. Now, whether it had to do with Trump or had to do with the precious metals industry, I don't know. I have my suspicions, but it was quite frustrating. Same thing, fast forward a year or two later, I started my crypto exchange, My Digital Money, which if anybody is interested in doing any crypto in their IRA or outside their IRA, mydigitalmoney.com, we can do that for you. And I had the hardest time finding a bank. None of the major banks would touch us. And I had to it took me 6 months to find a bank that was willing to do business with us. We were running a very legitimate business. We've been in business for 4 years now. We've never had one account hacked. It's a very straightforward platform, a lot of customer service. People love it. Nobody wanted to do business with us. I'm a well-established business owner, an entrepreneur. So I feel the pain of what's happening in the crypto industry and these politicians, even President Trump and his family had a few accounts recently. They talk about this on Joe Rogan, had some accounts closed. And the banks just say we're de-risking. That's all they say. And they don't have to say anything else. Well, who could go in and decide that you could just do that with people and that there's no recourse? I mean, banks are, if you have a legitimate business, you want to open a bank account, you should be able to do it. And what they're doing is if they don't like the business you're in, if you don't like you, they're just dictating that. And that's my big issue with a lot of these banks today, is that they judge you based on who you are or what kind of industry. Listen, for people to say that crypto's not here, it's here. It's been here. There's ETFs. So for them to not allow Facebook to create their own crypto, that's they're picking and choosing. And at the end of the day, banks are supposed to be a place to allow you to transact business, store money. And this is my big issue a lot of times with banks. And we see it across the board. I see it at Noble Gold all the time too, where clients go into Noble Gold and want to do a wire, and the bank teller tells them no. It's not your money. You're just, your fiduciary obligation is to me as the client, is you're holding my money, and if I wanted to go somewhere, it should go somewhere. So, these are things that always frustrate me, and this is why a lot of times you see people pulling money out of the banks and going into hard assets just because they want the control. They don't want to be dictated. And these things are happening. So people have to be, they have to be careful with their assets because a lot of times these institutions think the money is theirs. And it's not, it's yours. And we've worked hard for it. Everyone here has worked hard for it. So anyway, yeah, be careful. The debanking is happening. It's something that's rampant, and you really do have to be careful with your assets, and you have to really have some control. And which leads us into, what we're talking about today, which is our Noble Gold promotion, which is for December. What do we got here? We got some silver. We got some silver eagles here. This is our promotion for December for anyone that's doing any kind of rollover IRA, 401k, any account. It's a great time to look at it. You're going to get 10 of these for free sent to your doorstep. The most popular U.S. minted coin ever is the U.S. Silver Eagle. This is real silver delivered to your doorstep. So for anybody that's curious, wants to learn about, divesting or getting some funds out of a old 401k or an IRA, you're just not happy or you're concerned, call us. These things are happening out there in the banks. Obviously you see what's happening with martial law. It's a good idea to have some asset preservation. And this is all we do. We do real physical metals. We don't do any stocks, no ETFs, the real thing. So for anybody that's looking to get started in December, they're going to get these coins here delivered to their doorstep, any qualified account. And just want to end here with, I want to thank everyone for joining today, and I hope it was helpful. And any questions or thoughts or comments, please send them to us, put comments below. We'll love to dive in next week and answer any questions that you may have. If we gloss over something and it wasn't clear, we did give a lot of information. Just let us know. We're happy to dive in more. But